So we're in for a real treat. Joining us today is none other than Joyce Mehlman. What makes her so special is that she's spent decades in the financial services industry. She's literally played on the field and making things move forward.
I started with Bancorp back in 2005. That was my first intro to fintechs. And back then, no one knew what data was. Data was just a customer's name, basically, and their account number and their transactions. And as long as we could expose that, everybody was happy. Data has become much more important, but it also has become much more sensitive. And you have all these privacy laws coming out. They're very strict for a reason. AI is definitely going to be a piece of how we leverage the data that we get. I'm not a huge fan of it right now. Be careful because regulations will come. And until they do, we really don't know what we're playing with. And the regulations are not going to be as lean as what you think they're going to be. I just don't think there's a big place for it in banking in general, maybe a marketing side of the banking. You can't let compliance sneak up on you. Compliance is the most important piece of everything. You can have a great app. You could have the best systems behind you. You could have a great bank. If you are not compliant, you are going to last about 2 days and you're going to get shut down. You only get one chance to go to market. If you blow it, you're never coming back. Fintechs don't get a second chance. You have to do it right the first time. And compliance is such a huge piece of that. Great partners of ours like LoanPro help you with data. They want to help you work with your bank if you just let them. I have to give a lot of credit to my team because they really, truly understand their space and the tools and support that they have within that space to be able to offer to our clients. I love talking to people at a conference and going like, tell me what you do. I want to understand what you do. And then poking holes in it. Some people don't like that I poke holes, but it is what it is.
What are some of the most prevalent and most difficult things that these programs run into, and how can they set their expectations correctly?
My biggest thing is choosing the right partners up front. We describe it as a marriage. Divorces are messy. They're expensive. It's long. It's hard. You lose a lot of customers along the way. We saw it firsthand with Simple when they left Bancorp.
Welcome to Fintech Confidential, bringing you the people, tech, and companies that change how you pay and get paid. Welcome to Accrued, the Fintech Confidential series presented by LoanPro. In this series, we're deconstructing the complexities of lending and exploring compliance, modernization, personalization through insightful conversations with the industry's best. I'm Ted Hupp, and with my co-host Colton Pond, guiding you through the intricate lending world. Whether you're deep in lendtech or just intrigued by the technology and how it's reshaping lending, you're in the right place. So now let's dive into another episode of Accrued. Colton, welcome back, man. Our last time we tried this, we had a handful of technical difficulties.
Let's do it, Ted. Here's to less technology problems today.
So we're in for a real treat. Joining us today is none other than Joyce Mehlman. She's the one that's behind, the driving force behind ILEX Consulting Group. And what makes her so special is that she's just not some other executive out there, but she's spent decades in the financial services industry, just like me. She's been around long enough to see a lot of crazy stuff happens. And because of that experience, she's able to lead at the forefront of fintech and not just sitting back and watching everything happen. She's literally played on the field and making things move forward. Her company is bridging the gaps between traditional banking systems that, we all know they tend to falter quite a bit. But not only is she doing that, but she's gaining and giving accessibility to all of these systems to make it easier for us to continue to move forward. Colton, I'd love for you to share, some little insights or maybe a personal story that nobody else knows.
Please don't. Some interesting ones for sure. I remember when we hired a few folks from Galileo, Brock Bennett and Susan Chafin, and they always talked about Joyce in this illustrious way as the godmother or grandmother of fintech and all that she's done for fintech. So Joyce, welcome. It's great to have you.
Thank you. Great to be here.
Here's a quick message from the Accrued series sponsor. As default rates continue to rise and margins compress in lending, financial organizations are searching for solutions to combine that operational efficiency with innovation. Look no further, as LoanPro allows lenders to enhance their origination, servicing, collections, and payments using the foundation of a modern lending core. Check out loanpro.io to learn more about how over 600 financial organizations have modernized their tech stack with LoanPro. I'm going to dive into the first question that's going to leverage all of this experience that you've had. But given the depth of your journey, you and I were talking about this, everything from the banking and treasury to issuing to lending. There's so much stuff that you've had the opportunity to play with. And I like to say play with because a lot of times when you're having fun, it's not really work.
I agree.
Yeah.
But I would like to understand from your perspective how the landscape has evolved and is continuing to evolve, especially around the traditional areas and systems.
I started with Bancorp back in 2005. That was my first intro to fintechs. And back then, no one knew what data was. Data was just a customer's name, basically, and their account number and their transactions. And as long as we could expose that, everybody was happy. It was a digital bank. That in itself was new. So we didn't really need to do much more. And then our fintechs were like, but we want to give rewards. And so we needed some data to be able to do that. But the fintechs did that, not the bank. And over the years, we've watched fintechs who have come into this space and have used data to help you save, spend, help you build credit, help you look at your finances differently, invest. You have companies like Robinhood that help you invest and do things like that. Data has become much more important, but it also has become much more sensitive. And you have all these privacy laws coming out, and they're very strict for a reason. There's a lot of PII floating around out there. And being a consumer myself, when someone has a breach, it worries me, especially when I'm using that vendor. It's really important that when we use data, we use it the right way and that we're not abusing it, but we're also keeping it safe. Now with open data coming in and open banking, it's a whole new piece. And AI, because we don't know how they're going to use this data. And I work with the Innovative Payment Association out of Washington, D.C., ETA, the Electronic Transaction Association, because these are really important topics that are first getting to Congress's floor and being looked at. And we don't have rules like Europe does today, or even Australia and other places are so far ahead of us in data privacy. So we need to understand, but data has become the core of everything these fintechs do. And it's the core of everything a bank needs to manage that fintech and make sure they are staying compliant. How you share that data, that's the question.
I love it. So
we got to AI in the very first question. Can you believe that, Colton?
I was literally saying we got to AI on the technology side, and then we got to regulation with 1033 as well, and combining those two. So on that note, Joyce has been funny over the 9 episodes. We've had very differing opinions of AI. You see a lot of fintechs, and you see a lot of technology, and you see a lot of what banks are doing. So both on the technology side and on the regulation side, what are some of the recent changes that you feel like are increasing the availability of financial services and increasing the forward direction that the industry is headed?
So I did say AI. I'm not a huge fan of it right now. I tell my programs to be careful because regulations will come. And until they do, we really don't know what we're playing with. And you're going to have to go back and redo everything because I can guarantee you the regulations are not going to be as lean as what you think they're going to be. So we try to err on the side of not using very much AI, but there is a place for it. I just don't think there's a big place for it in banking in general, maybe a marketing side of the banking. More banks getting into the space and it becoming something that the regulators know isn't going away. It's not a trend. Fintechs aren't here today and gone tomorrow. We are here to stay. And it is part of the banking ecosystem now. And the big banks have come to realize that. And they're not trying to shut everybody down. What it comes down to is making sure we have the right banks in the space who understand what they're getting themselves into and understand what it means to be behind a fintech or next to a fintech, I like to say, because they should be partnering, keeping that fintech on course and making sure they are staying compliant, but allowing them to bring their ideas to market that will help the banking industry and take us forward. I was just at a conference and they were talking about real-time payments and how excited they were that this is coming in the United States. And one of my team members comes from New Zealand and she literally just rolled her eyes because in New Zealand, you can pay people through a phone number and they've been doing it for like 10 years. Yeah. And so we think we're so ahead of the game here and we are so far behind in so many ways.
So I love your perspective there, Joyce. I completely agree. There's a lot of ways we are behind. There's some ways we've caught up a little bit. Open banking, for example. Europe was far ahead of us. Canada was far ahead of us. I feel like with recently Dodd-Frank 1033, U.S. has taken pretty good strides towards open banking, standardizing
Yes, I agree with that.
There's areas we're not. So like, what's holding us back? Like, what needs to change in the ecosystem to allow true innovation in the right way?
Every other country that we're dealing with that's ahead of us has a central bank. Sure. They don't have a banking regulatory system like we do at the federal level, at the state level, at the consumer level, at the business level. Getting all of those regulatory bodies to agree and make a concise and descriptive regulation that we can all live to is impossible. I've been in banking 45 years. I have worked with banks like Chase Manhattan and Bank of America all the way through fintechs. Never have I ever seen two regulators agree on anything. The first time I ever saw that was back in July when they came out with that tri-party announcement about third-party oversight. And it was very clear. They did it for a reason. They wanted the industry to know this was not going to be acceptable going forward. We need more of that. When you look at LATAM, when you look at Grand Cayman, when you look at the Bahamas, Mexico, Europe, there are central banks, one entity driving it. If you can get that entity to understand what you're doing and build the rules and the rails around it, the banks are free to do what they want. And that leads to innovation.
One of the things that before we hopped on camera, we were talking about is all of the different existing services that are out there. Maybe some are a little legacy, some are newer, but they have a difficulty of getting spread out because of the sheer level of effort that it takes to get up and going. How have you seen adoption of new technologies, not only moving everybody forward, but how it's changing existing services to do things that we may have never even thought about?
The industry is definitely starting to embrace it. I think a few years ago, everybody was like, no, unless you're one of the big guys, we don't want to talk to you. The industry in itself is becoming more accepting of new technology that can help them through what they need to do. I think the more tools that the banks and the fintechs use jointly for the right reasons, the better off we are. A bank using a tool to basically slap the fintech's hand while the fintech is trying to use it to stay compliant is not the answer, because it should be that we're all using it for the same purpose. And I think the industry is going there. It's just going to take a little more time. But I think in general, technology always drives things. There's always a human component, but we have to get around the fear we have of new technology. Loan Pro didn't exist 3-4 years ago, right? It's probably one of the best credit program platforms today, right? Galileo may have been around a really long time, but they continue to morph and change as they grow with the industry. You have to stay in tune, but your clients have to be able to accept that.
Oftentimes in the industry, we tend to separate segregation of fintechs and banks. It's how to bring them together. Alignment of incentives, alignment of direction, alignment of resource, alignment of even technology, right? Yep. And what banks or sponsor banks hear about increased visibility and increased control. And the more alignment you have, the better.
What if you could build fast but not break privacy? What if you could ensure data privacy, governance, and compliance with just a few API calls? What if you could worry less about PCI requirements while actually improving privacy and security? How much more time would your team have to truly innovate? How much faster could you build and ship new features? How much more powerful could your app be? Skyflow is a zero-trust data privacy vault delivered as an API. Skyflow's radically simple design lets you collect, secure, and tokenize personal information like card data and payment details. And with built-in features like encrypted data analysis and sharing, anonymization, and advanced governance, your days of choosing between data security and data usability are over. Whether you're just concerned with PCI compliance or need to go further to include CCPA, GDPR, SOC 2, and beyond, Skyflow has you covered. What if you could build fast but not break privacy? With Skyflow, you can. Visit skyflowsecure.com today to learn how.
When you think about this world of balancing compliance and regulation with speed and flexibility and adaptability and nimbleness, how have you seen banks and fintechs work together to do that?
I think the biggest thing with compliance is staying on top of it. You can't let compliance sneak up on you. Compliance is the most important piece of everything you're going to do. You could have a great app. You could have the best systems behind you. You could have a great bank. If you are not compliant, you are going to last about 2 days and you're going to get shut down. And the other thing is you only get one chance to go to market. If you blow it, you're never coming back. Fintechs don't get a second chance. When have you ever seen a fintech go to market, stop, pull back, go back to market again and be successful? It's very rare. So you have to do it right the first time. And compliance is such a huge piece of that. But the banks also have to understand fintechs are trying. They're not trying to avoid the compliance. They're trying to understand it. And some of it just logically doesn't make sense to them, which I agree, but they still have to do it. So instead of just pounding it on their head and saying, I don't care, you have to do this, help them understand why. There's not one fintech I have worked with that hasn't come to the table after understanding why and going, this stinks, but I got it and I'll do it because it's something we have to do. I don't want to get my banking partner in trouble. I don't want to get shut down. Let's just stay on top of it. If you let your partners know, not just your bank, but all your partners, you're coming out with a new product, you're coming out with a new service, you're changing your customer base because different risks come with different types of products, services, and customers. So the more that a bank does that and stays in step with their fintech, and you're right, there are a lot of banks out there that do that amazingly. And then there are some that we've seen that don't. Communication is such a huge key to this. Fintech is literally just an extension of the bank. And when people start to understand that more, I think this will become a lot clearer.
You're spot on. And your analogy on fintech and bank side by side, I was talking with Fintech Potential, who's the founder of Themis the other day, and they help increase collaboration, coordination between fintech and bank. And it solves a lot of those problems because those perspectives and communication, collaboration needs to be shared.
Yeah. And there are so many tools out like that today, which help you understand how to do oversight of AML and fraud. Great partners of ours, but then you have great processors like LoanPro. These guys want to help you with data. They want to help you work with your bank if you just let them.
How is ILEX ensuring that not only are these new tools providing all the different things, how are you measuring the efficiency and effectiveness of it and getting it integrated and making sure that it meets the level of the regulators? You brought up something, and I'm going to revert just here a little bit, but you brought up the letting everybody know what's going on. And I think that's been the number one problem with the things that we've seen in the news is that everybody's tried to take the Apple approach of don't let anybody know anything that you're doing until you launch it.
Right.
That works great when you're talking about consumer electronics.
Right.
It does not work great when you're in a heavily regulated industry that is mission critical, especially around money. But coming back around, how are you and the team at ILEX really helping get those put in an effective way and integrating it all together?
I have to give a lot of credit to my team for that because they really, truly understand their space and the tools and support that they have within that space to be able to offer to our clients. I have a great team. There's 20 of us and we all have our specialties. The one with the least amount of experience is 4 years. And the one with the most, obviously, is me, but even after me, 20 something to 30 years. Like our disputes manager has 22 years of dispute management experience at KeyBank. We're not just hiring people off the street. I love talking to people at a conference and going like, tell me what you do. I want to understand what you do. And then poking holes in it, and seeing if they have the answers to those holes. I mean, some people don't like that I poke holes, but it is what it is.
So I completely agree with you. I love keeping a beat on the industry so long as it's not another KYC, undifferentiated KYC company that I talk to over and over and over again. Yes. What do you do? I do KYC. How do you do it? Oh, I do it the same way.
I do it the same way.
Okay.
Or you dig in, you find out that they use the same vendor as everybody else to get the data that is
we have
broken.
a very incestuous ecosystem.
Yeah.
Right. And I think everybody knows that. We just have a very small ecosystem. So people tend to use each other's knowledge and technology. I think when you look at it and go, but why? And why are you different than you? If I can get to the same back end, either through one of you or directly, why am I using you? That's always my first question. Where middleware steps in, I'm not a big fan because I don't get it. Why would I use middleware when I can go directly to the vendor themselves? None of these vendors are saying, I can't work with you. I will only go through this middleware. We have a lot of investors that have invested in all of these companies and they want the best for them. So they try to form these partnerships. And sometimes they work and sometimes they don't.
For me, I think that's one of the number one hurdles that any startup and any fintech really gets into, has to come over, is because they are looking at compliance and they're looking at operations and they're looking at technology, and they're looking at it from the perspective of, how do I maximize my relationships? I really would love if you can share with us an example of a compliance strategy that shifts away from that and how you guys approached it versus that ecosystem that I just described.
We are vendor agnostic. I'm going to say that up front. If a client brings a vendor to us that they absolutely want to work with, we will never say no. We will work with anybody that's out there as long as I am comfortable that they could pass vendor due diligence, that the bank is going to be comfortable with them, and that they actually do what they say they do, and that they're not ridiculously expensive. So, I
love how you had to put that last one in there. They say they do what they say they do.
Well, we've seen some of that through the years, right? We think you do what you do, but you really don't do that. So we'll just leave it at that. We come to the table and we say, okay, let's talk about your program. Who are your customers? What is your product? How do you want to go to market? Are you charging fees? Is this a high risk product? Are these high risk customers? Are you accepting people without SSNs? That helps us drive who they should work with within the industry to the top 3 or 4 that we feel are best in class. Now, people can have different opinions than me, and that's fine. That's what makes this world go round. But my team has their opinions and they will share them. And then letting them build out that house from the ground up. Instead of coming in from the roof and then just dropping poles down and saying, we have everything here. Now let's just fill in all this. We go from the bottom up. Right. And that's the only way it's ever going to work. You have to go from the bottom up. You build a house from the bottom up.
You talk about all these different pieces and building it from the ground up. It's really hard to scale. And when these companies are working to scale, a lot of times they don't realize what is going to come next. A lot of these folks will come in with a managed program with the intention to come off, but then get to that point and realize, hey, I don't have the operational things in place in order to do that. What are some of the most prevalent and most difficult things that these programs run into, and how can they set their expectations correctly?
My biggest thing is choosing the right partners up front. Like when we introduce a fintech to a bank, we describe it as a marriage. Divorces are messy. They're expensive. They're very hard on people, right? The family. Well, your employees, right? In this case, you have to move a bank. You have to get a new BIN, right? Most banks won't transfer BINs these days. It's really hard. So you have to get a new BIN. You have a new routing number. You have to recard all your customers. It's expensive. It's long. It's hard. We've done it. We've done it many times with our customers. It's not easy. You lose a lot of customers along the way. We saw it firsthand with Simple when they left Bancorp. They lost so many of their customers who got scared and they didn't know what was happening. And yes, back then fintechs were new, so it was even scarier, but that was a huge issue for Simple at the time, right? Your processor, another one. If you have to move your processor, you have to change all your APIs. It's not a plug and play. They're not all using the same APIs. It's expensive. And again, basically you're starting from scratch. So what I try to explain to a fintech that's coming in and saying, well, why shouldn't I use, I'm going to call it the traditional BaaS model, which is really the middleware. My biggest explanation has always been, because why would you do that when you know at some point you're going to grow out of it? You're going to need to be your own program manager. And at that point, you have to start back from scratch. So all that money you spent to get launch, now you're going to spend again. And on top of that, now you're inconveniencing customers who are finally getting used to you. And if you don't do it because you get scared, you're going to stunt your growth. And at that point, you have nowhere to go. And so it's a catch-22.
I was thinking of this analogy as you were talking, Joyce, of a house that you build, and building the house or your fintech or your lending business or whatever it is on either a rock or the sand or beach, right? And it's like, I'm going to build it on the beach because I'm already here on the beach. Yep. It's like, no, then I got to lift this house and put it on a rock, a solid foundation.
Yep.
It may be more work to do it up front, but what I love about what you're emphasizing is the work up front is worth it, right? The work up front to choose the right platform and providers. And we talk about this all the time in Loan Pro because we are not the low cost provider in the market, but
Right.
we know we can provide more value than everyone else in the market.
Yep.
It's hard for folks to see that up front and be like, just do it later. No, it doesn't quite work like that. You need to set yourself up, build the foundation strong from the beginning. So you're set up for growth and expansion and what that looks like.
Yeah. I mean, you want to research your partners, right? You want to know who they are and that they're stable and that they're doing things properly and that they're not in the view of any regulator right now, especially today, because, you don't want to be set up for failure.
What are some red flags that you look for?
Somebody that says, I can do everything for everybody is a huge red flag for me because you can't. I'm sorry. It doesn't work that way. You don't do everything for everybody. Pick your lane and be great at it. Some of the other red flags are financials. Your bank, your processor is going to ask you for yours. Ask them for theirs. If they're not a public entity, you have a right to know. What is their capital, right?
Yep.
What does their balance sheet look like, especially if you're doing lending or credit? One of the reasons why some of these partners are so good, even though they're not the cheapest, is because they are so rock solid. Look at partners in the credit space like WebBank. Like, they're not cheap by any means, but they are the best at what they do and they can afford to charge it because of that. I worked with Bancorp for 5 years. When it came to debit and prepaid, they knew what they were doing. Cheap doesn't mean good. When you buy a car, just because it's cheap, is it a good car? Or are you going to have to replace it in 3 years? It works in all things, not just material things.
One other side note question that I've got to ask right here. Give us your perspective on build versus buy. If I'm a fintech, I'm going to stand up a credit card or I'm going to stand up a lending program.
I would say buy first and then build. So as you grow, you look at programs like Current, Chime, Lily, Dave, these really big ones that are millions of customers strong. They're going to build it out. And that's fair. Like that they should at that point because they know exactly where they are in the space. They know what they need. They still need some support, whether it's a connection to the network or dispute management or whatever, but their core tools they're going to build. Building it from scratch when you're first starting is going to make sure you never get to market. You will never get there.
The most common cause of bad customer experience isn't that high tech. It's embarrassingly simple. Yep, it's answering questions. In e-commerce, it's really easy to get bogged down with common questions, whether that's where's my package, how do I return or exchange this item, or just to cancel a subscription. SolvePath is an AI-driven customer support system that enhances the customer experience with visual formats and self-serve technology to empower your customers to handle their own support requests. Get the best customer support system for your business. Get SolvePath. Get started by visiting getsolvepath.com. From your perspective, Joyce, when does the partnership make more sense than the buying or building?
And on top of that, what are the aspects that I should buy versus build and how should I evaluate that?
So first, let's finish the buy versus build. The aspects of buy versus build is you're not going to build your own processor today. Any program that thinks they're going to launch and have their own ledger day one is never going to happen. Any fintech that launches day one and thinks they're going to be able to manage their own disputes is not going to happen. Mm-hmm. So there are pieces that you absolutely have to buy, right? And then there are pieces you could potentially build, like build your own website, build your own app, build your own internal database, concentrate on the 3 things that are really important. Raising capital, right? And fundraising, product, and marketing. Those are the 3 things that fintech should concentrate on immediately. Everything else, use a partner.
Well, that was a really short answer for partner, but I'll accept it.
I mean,
that's a great answer.
Yeah, there's so many tools out there that are so good at what they do. Now, when I talk about partners, I'm talking about specific types of partners that allow you to do what you need to do and aren't trying to step in the middle. That's not the way of the future.
Or partners that don't handcuff you and not allow you to build on top, right?
Exactly.
And allow you to actually do things that want you to do everything in their ecosystem. That
that doesn't work.
So without using names, can you describe a good partner and a bad partner, like kind of a description? And if you want to use names, please go ahead. But
as I have a hit out on me. There are a lot of people in this industry that already know me well enough and don't like me because of it, but it is what it is. A good partner is a partner that allows you to grow, is a partner sitting at the table with you that maybe can't let you do exactly what you want, but is willing to work with you to compromise on what could work. Having a bank that sits with you that says, all right, no, you can't do that kind of lending, but let's talk about what you can do and what we're comfortable with versus just saying, nope, not going to happen. You're done. No lending. That's it. Where you have to go find another partner now. A tool, middleware, that says to work with us, you have to use these 5 tools behind us. You don't get to choose. You don't get to build the rules, and you don't get to make the decision. We tell you who passes KYC, not you. And you don't get to see your customers because we're doing all of that. We hide it from you.
Boys.
And that doesn't work.
My stomach with that one. Whew.
Well, and we see it. We've seen it happen over the last year. We see one right now that just filed bankruptcy. That was a big proponent of that. We see a couple others that have changed direction over the last few months because they have to. We tried to bankrupt. It didn't work. We knew it didn't work very early on. We had to give the fintechs the ability to be their own guide in what they were doing and being there to be their support and their oversight and kind of a big brother or big sister if they need it, or arm to, shoulder to lean on, or whatever it may be. Making it more human is definitely the way, instead of just throwing a bunch of systems at somebody. That doesn't work. It's never going to work.
There are some sponsor banks that believe that the only way that a compliant program could ever work is as if the fintech only uses their systems, their tools, their stuff through their own things. What are the pros to that and what are the cons to that?
So the pros are easy, right? It makes everything consistent for the bank. And I get that. Coming from banking, and I'm a banker, so you ask my team, I always lean to the side of the bank and not the fintech when it comes to compliance because I've been there. I've helped banks out of sanctions. I've been on teams where we had to deal with regulators. Like, I get that. And so it is consistency. It does help the bank do their oversight a lot cleaner. It is easy to explain to a regulator. They're using my systems. I can see it. Every one of their accounts is opened on my book. That's crazy. You can't, as a bank, the con to that is, what are you going to hire? 90,000 people in your compliance team? There are banks out there that are just exploding with people because that's what they're trying to do. And that's not the answer either, because then you have people looking at it differently within your own team. We see that every day with the banks we work with. We'll have 2 programs. We have 2 different reps at the bank working with them. And they both come back with different things on our policies. Same exact policy, different feedback. That's not good either. Consistency at the bank level is really important. Consistency at the fintech level is really important. And so the cons is, if I'm a bank like Bancorp, where we use FIS, Metavante, and then FIS is our core, and they really can't support, and I know they're trying, a fintech the way a fintech needs it faster, it's hard to turn a cruise ship. So it takes a long time. And so fintechs and they're expensive, don't like working with the Fiservs and the TSYSs and the FISs of the world. But that's who you force down their throat. You're going to lose a lot of potentially really good fintechs that could work with you. There'll always be a fintech that says, I just need to get to market. If that's what you want me to do, fine. They may or may not regret it later on. And that's great. As my family says, the reason why Baskin Robbins has 32 flavors is because everybody likes something different. There's always going to be a space for everybody. We shouldn't have to fight with each other. There's enough that's going on here for all of us to be able to do what we do. But I do lean the way of giving the fintech the autonomy to pick the systems that make the most sense. And then having the bank have access to all those systems and having a really good tool behind those systems that bring it all in and allow it to be viewed consistently is the same as having everybody on the same platform, but giving the fintech the ability to not have to use it.
Control and visibility are the important aspects here, right? And then everything else can follow. One of the aspects that I'm excited to get to with you, Joyce, is I want your perspective when it comes to lending and credit. What are some of the trends that you're seeing that are shaping the industry and shaping the direction that we're moving forward? It's
interesting. When rates are high, credit tends to not be as popular, right? We go through these cyclical things when rates were low. Buy now, pay later was all over the place. But I just saw today that buy now, pay later is now turning into installment. Like, okay, whatever that means, buy now, pay later. I thought it was installment. Yeah, that's what I'm thinking. I'm like, do you call it something different now? I mean, okay, this makes no sense. But, and I do see secured credit is still a big thing, right? Credit builders, secured credit. But what we're seeing more than anything is niches. It's credit for people in a specific niche. We just started with a program today that is specific to veterans, people in uniform, whether it's military, firemen, policemen, right? Helping them, because a lot of times our most important people in our social atmosphere have the least ability to get what they need. Yeah. And usually are living paycheck to paycheck, like teachers. You know, we work with, and I'm going to call her out because I think it's amazing. We work with Totem, and Amber is unbelievable. Yeah. And it's for Native Americans. And she is doing something for people who have been marginalized, who have been preyed on, because she saw it personally. Programs that come out of a personal experience in innovation and breed from need are the programs that make the most sense. Not everybody could just be another debit card out there and be another Dave or Chime or whoever, right? You have to have a reason to exist. And credit has to have a reason. People are willing to take that risk if the reason is there, if they will get a benefit from it.
I completely agree. One, Amber Bucher at Totem is awesome. She's doing some incredible things, but what's highlighted in what you're saying is the direction of credit and lending and general financial services is driving towards increased personalization. And what I love, and you kind of highlighted before, with some of those legacy players in the market that are just like Titanic ships that take a long time to turn, it's challenging to drive that level of personalization. So there's a need of modernization. There's a need to drive like a modern tech stack that allows you to drive that level of personalization you need. Yeah. The way that the industry is headed.
B2B credit's becoming much more popular as well. And B2B buy now, pay later is becoming much more popular. Like the really coolest thing I've heard recently is allowing a company to have a card that if they can't pay off in the first month, if they do, they get 2% cash back, let's say. And if they can, then they go down to 1% cash back the second month and a $25 fee, no interest, right? And the third month, they lose all their cash back and it's a $50 fee, but you have 3 months to pay it off. For small businesses, that could make or break the way they stay in business. We did this when I was at the big banks. It's called factoring. It's called letters of credit. It's called whatever you want. Lending against purchase orders is becoming really big now. It's becoming a bigger thing. The fintech space is catching up with the big commercial banks. So you're going to see lending that traditionally only the big banks could do coming through fintechs now. Lending against pre-IPO stock options is another one that one of my programs did. Like there's some really cool ideas out there.
There's a couple that I've come across, and one that keeps coming across my desk, which I think is interesting, is a card program that is a credit, and they also have a debit program, but the rewards aren't points. They're not cash back. You choose the stock that you want to buy and you get fractional stock in the companies that you're interested in. And what we started to see is that the consumers were buying stock in the companies that they spent their money at the most.
Yep.
Those who spent a bunch of money at Walmart got Walmart stock. Those who were shopped at Target got Target stock. People, exactly. That was my next one is Amazon. They used Amazon stock. So I thought it was really cool that they were able to figure out how to be able to offer that service because that is regulated by the SEC.
Yep.
On top of that, you have the banking regulation that goes on top of that.
No, that is super cool. I think the other thing that's really cool is people underestimate consumers and what they're willing to do and give. We have a program that instead of giving cashback rewards or points, your cashback, you can choose to donate.
Yeah.
I can't tell you how many customers do that because you didn't have that money to begin with. I'm going to spend that money on Amazon regardless. Why wouldn't I want to help somebody with what I've spent? I don't need the $10 or the $2 back. Give it to, children in hunger. It's easy for me as a consumer to help when it's just seamless.
You want to know what's cool about that? I did some research in graduate school where giving more charitable donations leads to increased spending on other things.
Mhm.
So it's actually good.
It
And
actually also increases your ability to be happy, believe it or not. If they prove it, like you feel better about yourself.
Now let's quickly shine a spotlight on a game changer in the financial world, ClearingWorks. Simplify your financial management with a one-stop solution for all your AR needs and with a single login. Are you intrigued? Visit clearingworks.com to schedule your demo today.
I would be amiss if I don't talk about one of my favorite card programs. It's on Loan Pro, actually. And Joyce, I know you know these folks. Luke over at Arrow. I love what they're doing. They offer the smallest credit line in the US. And it's people with like no credit, zero credit. And it's a $25 or $50 credit line. And what they do is you make your first payment, it increases to $100. You make your second payment, it increases to $200. And to Joyce's point, like unique aspects of how to help folks underbank, thin file, build credit in a unique way. But that requires modern infrastructure, but is really, really interesting.
I think what's really cool about that, and I'd heard about them and I couldn't think of their name, so I appreciate you bringing that up. They don't know how to build that credit without having to do the secured card that maybe they got to throw $500 into. Well, heck, they don't have $500 to put into it, or $250 or whatever it is. So I really like that. That teaches them, one, the responsibility and how important it is. Two, it rewards them very quickly. And then three, it really drives them to do that in other places in their life. And that's what I take away just from the discussion that you just had, Colton, about,
the cool
about
thing
how
about
they
it,
do that.
The cool thing about Arrow is also they educate you.
Yeah.
There's a piece that you have to go online and actually read through and pass the test kind of thing before they're going to allow you to even increase the line. And I think that's one thing most programs forget is education. Don't just throw a product at somebody, but teach them why. Why should they use it? You know, it's really important. I work with a company called Benny, and they work with SNAP, and they move money for people who get SNAP and, you know, welfare checks and all of that. And what they're doing now is a secured card. But I didn't know this. I actually didn't know this. People who receive SNAP credit also get a certain amount that is discretional that they can use to not have to spend on specific items that only SNAP approves. They're working with that discretional fund that they get, that discretional money, to put it into a secure type credit account so that they can build credit. Because I'm going to give you a personal example. I have a child who got out of school, was a sports marketing major, worked for a huge New York sports team, was working 90 hours a week between his work and the games, and was making so little that he was eligible for food stamps.
Oh, wow.
That is the reality of these kids coming out of college today. So these people that are on SNAP or getting food stamps, everybody always thinks, oh, they're on welfare or they just don't want to work. That's not true. They could be your cousin. But getting a chance to get credit built, because if you're there, chances are you've probably screwed your credit up because you've tried everything first to not have to borrow. This helps them rebuild it. So like they're a great program. I love programs for the cause. I think they're amazing. I think that's what's going to drive the industry. But just typical, I'm just a debit card out there and offer you 5% cash back is going to die on the vine at some point. It's those that are triggering cross-border. People trying to share money with their families in other countries. It's really important. Open banking should mean open a global banking. We have to get our heads around that as people. We have families all over. We don't all live in the same town anymore. Getting money to our relatives who are living paycheck to paycheck or don't have money to buy food is extremely important. The whole battle around early wage access. People can't afford it. They have to choose. Do I buy lunch or do I pay for bus fare to get to my job? Because I have to wait a week to get my paycheck. Right?
And same on the business side. It's like, hey, I have a food truck and my air fryer broke. I can either get a loan and replace the air fryer and go to the food festival, or I don't, and I don't make money. Ted, I'm going to throw my hat in the ring. We should talk about innovative credit programs on every episode. This was awesome. I know about cool people doing interesting things in the ecosystem.
You know, you mentioned about the cross-border, and I have a friend who they didn't get into this on purpose, but they have a credit program that goes into Mexico. And they've seen that just explode over the last 12 months. And they're actually struggling to keep up with it because it has just gotten so big so fast.
Yeah, there's a lot of programs that are dealing with Mexico right now, and each one of them, it's amazing how fast they're growing and what a niche that is, but we're also seeing that this is all over. This isn't just Mexico. It's just Mexico is our closest border.
I'm going to move into our last segment. And I always start off this way. We just got done talking about some really cool stuff that people are doing today, but I want you to reach under the desk and pull out your crystal ball, just sitting right there in front of you, and help us understand what you're seeing in that crystal ball to what's happening in the future. Are there some major trends that maybe we've talked about or haven't talked about that are changing the way that people are looking at finance, lending, at financial technology? What is like that thing that starts showing up in that crystal ball for you?
AI is definitely going to be a piece of that and how we use it. Open banking is going to be a big piece of that and how we leverage the data that we get. Real-time payments is just huge. Like getting people money faster is the biggest thing. Being able for people to be able to access their funds and use them is, unless you're a multimillionaire, you need your money and you need to get to it. So any way we can do that quickly and safely is the right way to do it. So whether that's real-time payments or instant payments or same-day ACH, all the things that, other countries have been doing for a while, it's going to go B2B to C a lot more in the future. I think we're going to see a lot more of that, especially on the credit side. Programs like TeamPay or Brex or Ramp. And that is technically a B2B to C. It's just their employees. They're giving expense costs to employees, but at the end, it's a consumer using it. They just happen to have the title of employee. Those types of programs are going to become more and more commonplace, where you work with a program who then offers their services white labeled out to the consumers on the street that they work with, right? I definitely see that. I think straight to consumer will always have a place, but it's risky, and banks are shying away from it more, and they love the B2B model. And I think the more you control you have, the better off you are. On the consumer side, credit builders are going to have their place, but will not be as big as they are today. I think new ways of offering credit, look at programs that do, instead of having a secured credit card where there's an account that you can't touch the money, the programs today where you have one account, your balance is $1,000, you swipe your card, it goes down to 50, but that is a credit card you're swiping. You don't have to pay it, but we put a hold on it so that you can't reuse it and ACH it out. So because we have fraud in this world, unfortunately, we have to do that. But it also allows you to get the feel of what it's like to have a credit and build that credit up with the credit bureaus. But it's not having money locked away. If you need to get to your money, you can use it, but you know that now your money available has decreased.
Yeah.
So it's kind of a debit, but it really is credit because you still have to pay it at the end of the month and then we release the funds.
That is a really interesting approach. It makes me think of like some of the ways that I was taught how to build my business credit using different tools, but the similar concept. And it's really neat to see that kind of moving forward is a little bit further into more of the consumer side of the house.
And here's where your partners need to keep up with you. So partners like LoanPro need to be able to support that, right? How do you support that? How do you make sure that these programs get the information they need quick enough to be able to lock those funds, right? Because we rely on you as our partner to keep us safe as well. So not only are the fintechs bringing amazing ideas to the industry, our partners have to keep up. That's what we were talking about earlier. It all circles back. Keep up with what's going on. Stay in tune. Talk to each other. Communicate. Find out what's going on in the industry. Try to make a difference. Make it work. And collaborate.
Well, Joyce just took us through the whole industry in 3 minutes, which is awesome.
I know.
What's going on. That was the most thorough answer, Joyce, that we've received to that question. So, Ted, I have nothing else to add. That's it.
It was super clear. Like you've got me at loss for words. That doesn't happen often, Joy. So, but no, honestly, today's been great. The conversation has been fantastic. We've gone through so many different areas. The perspectives that you've shared just really help us align to understand what's going on in the market today and honestly, how we got here, but not just how we got here, but how we can move forward with what's going on and what's available. And it's not all doom and gloom. You can read all the headlines. It's not doom and gloom. We can definitely move forward, but we've got to be pragmatic about it.
Mhm.
And I love how you brought it to
We have to be
today.
good financial corporate citizens and make sure we're doing things the right way so that more banks can get into the space and not get in trouble. And the regulators can start to back off again and feel comfortable.
Key theme of personalization is super, super, super important. And I feel like oftentimes that message can be missed. I'm a big believer that eventually the best product wins. And ultimately, the product that drives personalization, even to the level of the individual consumer, is where I think that we're headed and where we're going to go. Joyce, sincerely, thank you for the episode. This was fantastic.
Yeah.
Oh, no problem. I could list a lot of programs we work with that I think are amazing and wish could give them airtime. But yeah, you just go to our website. You can see a lot of them on our partner page. I will call out the program I was talking about with the veterans. It's called Honor. And I love that name.
Oh,
and they're the ones that are doing the donations back to these families. And I can't wait to get them to market. I'm just so excited.
yeah. Sam Mall and I were talking about Honor at ETA last week and got into some really interesting conversations. So no wonder it sounded so familiar to me.
Yeah, we just had our kickoff call with them today. So we're really excited about working with them.
Well, that does it for another episode of Accrued, a Fintech Confidential series presented to you by Loan Pro. Now, if you've made it this far, make sure to go ahead, like, subscribe, all that other fun stuff that they like to say on YouTube. And if you want to learn more and find out when these episodes drop, please go to fintechconfidential.com/access to get notified of all the great things that we're doing over here. As we wrap up today's episode, I've got one last thing for you. If you're in the trenches fighting fraud and financial crime, you know it's a complex battlefield. That's where Hawk's AI tools for real-time payment screening, AML, transaction monitoring, and dynamic customer risk rating come into play. These aren't just buzzwords. They're game changers designed to make your compliance more effective and less of a headache. Imagine slashing through false positives with precision and giving your compliance strategy the edge it needs. Head on over to gethawkai.com to sign up for a demo and discover how their platform can revolutionize how you fight fraud and financial crime.
This has been a production of DD3 Media with all rights reserved. This is provided for informational purposes only. It is not offered or intended to be used as legal, tax, investment, financial, or other advice. We strive to provide accurate and up-to-date information, but will not be responsible for any missing facts or inaccurate information. You comply and understand that you should use any of this information at your own risk. Cryptocurrencies are highly volatile financial assets, so research and make your own financial decisions.